Everybody, this is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com, drstoxx.com. You're looking at our website, which has been in place here for about a dozen years, and we're hiring a new company to replace it, but it's going to be the same URL, drstoxx.com. This is coming to you live today from the live trading room. And if you want to join me and see everything that I'm trading, you get the ticker symbol, entry price, stop price, target price, reasons for the trade, adjusted stops along the way until it closes. You can go to the subscribe menu, scroll down to the live trading room, and if you want to add on our new live options room where we only do long calls and puts, you can do that at a 40% discount. All right, we're going to jump over to charts, and we're kind of at a transition here, and I've been saying this for a couple of days now. We've had this nice bounce off of the panic lows. Those were AI is too expensive panic lows. We've had a nice bounce, really strong volume coming in, and now the volume's petering out. The professional money is beginning to think, maybe we're not going to get back up to all-time highs. Maybe we're going to get a pullback first. And tomorrow is the FOMC day. So Jerome Powell will come out and tell us, very likely, we're going to get a 25 basis point cut. He'll give us a bit of a preview of where he sees the market, where he sees the Fed cutting rates again. The general consensus is coming out of all the big banks today, and they all came out and said, this is what we think he's going to do over into 2027. They all think he's going to cut maybe once more, maybe twice more, and then that's about it. And some banks are thinking he's going to delay the second cut, maybe several months, and some think he's going to do it right in January, and then the third cut, if there is one, gets delayed maybe till the end of the year. So if that's the case, what the market really wants is a cut today, a cut in January, and the promise of two more. If we don't get that, let me say it again. If Jerome Powell clearly says we are not going to get that, and he may not be clear, then I think the market is probably going to sell off. And it probably should, because it's gotten a little bit ahead of itself, a little bit frothy. And we're still, the liquidity in the market and in the bonds and rates, in the lending rates, I should say, is making capital a bit hard to come by. And that's something that slows down the progress of the market. And I think the market hasn't quite priced that in yet. We still have tariff stuff to deal with. We have this NVIDIA and China deal going on. Bitcoin has been under a lot of pressure, but there was some really good news coming out today. It's bouncing back up quite a bit. We'll take a look at that. Also, I've been very bearish on Bitcoin, but I think I may have to change my tune here soon. If not today, then soon. All right. Let's take a look at this. S&P 500 all-time highs are back here. This is an all-time high on a not a total account basis, so it doesn't include dividends. It's just the price of the 500 stocks. And we are under that, and we are printing what could be a potential lower high, which in and of itself is not it could be a bearish thing. We're also equal to this little pivot high here. That was the B wave up of the ABC wave down, and we're right up against that, and we've been up against that for 3 days now, and we haven't been able to get through. So I kind of thought that by the time we got to tomorrow, we would see the S&P 500 up here at least equal to the all-time high. What is that? 6950, we'll call it. We didn't get there. We haven't gotten there. So the market's been a little bit lower than, or a little bit not as strong as I thought it would be on this date, but it's been good, and we've been making some good money both on the way down. Although we didn't trade that little flash crash right there, that 4-day. That was a pretty painful week, and then we made it all back and more the very next week, and we've been kind of putting a little bit into the bank, still hitting all-time highs, but the trading has gone very flat, tight, choppy range, not much trending action at all for the last week and a half. And it makes it a little bit difficult to swing trade. We have found some good sweet spots, but they're far and fewer between now than there were on that nice crash, on that nice upside relief rally. This is a nice trending action here, nice trending action here, nice trending action here, beautiful trending action back here. And that's just the kind of thing we haven't had for a while. So we will, but I do think I'm leaning in this direction that we're going to get a pullback first off of this lower high and the Fed, and some disappointment because, as I said, I don't think the Fed's going to give us what the market wants. And then we'll get closer to Christmas. So I think, from tomorrow to maybe December 21st, 22nd, we'll see some weakness. And then at that point, people start positioning on the long side again for a good, healthy Christmas rally, which we should see to close out the year. It's been a good year all around, not straight up. We had that big March and April crash, but overall, it's been a very good year, and we're just keep hitting new high after new high. Nasdaq is pretty much the same story, but the lower high is a little bit more pronounced here, right? We're further away from the all-time highs. We are at this little pivot high and rolling over again, like the S&P 500 is, kind of setting up for what could be, as I said, a week and a half, maybe 2 weeks of some softness in the market. I don't think it's just going to go straight down. There's no real reason for the market to go down 5%, as a kind of typical correction. But I do think a 3 or 4% move overall, it'll be a little bit choppy, probably on the way down is likely what we're going to get. Now, the small caps went up to all-time highs today, just barely on an intraday basis, not on a closing basis just yet. But looks like we're going to close just a smidge below the all-time high. But that's good news, right? This is the small cap index, and it tends to show the market or lead the market in terms of the risk on trade, when traders are willing to take more risk than at times when things are a little more volatile. The small cap index is the one that usually does pretty well. And the small cap index doing well also signals that the market is expecting, I don't think they're going to get it, but they're expecting a very dovish report tomorrow from the Fed. So we needed to see two things, really. We need to see Jay Powell during the presser give us, and I'm sure he'll be asked about it, give us a good, clear picture that he is willing to cut 2 or 3 more times after this one. And I would say 3 is kind of the optimum number, and the market would do really well with 4. We won't get 4. But 3 after this one, 3 in 2026 is what the market is wanting. And we need to see that. And we also need to see a little bit movement in the dot plot, right, which takes all the governors into account. And those are the same guys that are going to be there if Jay Powell gets replaced. So this is important, right? The dot plot is important. If the dot plot shifts a little bit anywhere in the direction of being more dovish, i.e. more rate cuts, we'll see the market be happy. But those two things need to happen. I don't think we're going to get either one. That's just my thought. Now, let's take a look at Bitcoin, because I've been bearish on Bitcoin, and we still need to be bearish until that RTL gets taken out. It tagged. It has fallen back underneath there, right back to the 21 period moving average, EMA, 21 EMA. And if it closes it below that, or if we get down below that tomorrow and we kind of fall off the wheel here, then I think we're still back in bearish mode. But my map, I've been bearish Bitcoin since not up here, it wasn't that wise, on that red bar right there. So that was like, halfway through November, we lost a trend line, we lost some intraday support, big volume sell-off, and it was shot down from there. Relief rally down, relief rally huge down, and now we're back into a relief rally, which in my opinion is more likely to roll over and go down another leg than to break out and go higher. But all that is off the table if we A, get dovish Fed, and B, we continue to get some good news. We got some good news out today that banks are now going to start accepting Bitcoin payments, and PNC is the first one to say, yeah, we're aligning with Coinbase, and we're going to do it. We're gonna let people pay in Bitcoin and save their Bitcoin and open up a crypto wallet. I don't own any of those things. I'm long Bitcoin, long-term basis. I'm short Bitcoin on a short-term basis, following my thesis. But I've never gotten into the whole digital wallet thing. I don't even know what one is. All right, but that's Bitcoin. So it's still a no-go zone on the long side for now as far as new swing trades go. But today's movement on good volume, on good news, is a very positive step toward ending this downtrend. Okay, now keep in mind that downtrends that are long like this, right? This goes all the way back to July of last year, and then the all-time high was back in early October. And there was a guy who started shorting Bitcoin in my pro trading group. He was as bearish as you can get, as early as you can get, right off those new all-time highs. It was just about a week into October. And he said, and I quote, Bitcoin's going to 75,000. Now, he said that when it was up above 120, right? I think he shorted on that red stick right there. So he probably shorted it around just under 120, 119. And it got as low as 80,000 and or 81,000, 80,500, and that's pretty close to his target, but he's still holding out for 75. So 75 is down here, and I think that's if we do get a rollover, and the rollover is going to happen tomorrow, because if it keeps going up tomorrow, it's going to break out and close above that resistance trend line, and then the downtrend is pretty much over. Doesn't mean it's going to continue to go up, but it does mean that it's probably not going to do any crash anytime real soon. Now, Ether's a little different story because Ether has a big move today, and it is on top of the resistance trend line, and it's above the 21, and it's got a big green bar. So unless this totally reverses and rolls back down, which it can do, right? I mean, we can see a big move here that got reversed. There's a nice little inside day bar that looks very bullish, and it got reversed. Here's some nice bullish activity in here that went right down again. So no guarantees that this breakout is going to hold, but that's as good as it has looked for months, right? Now the different guy in my pro trading group, he doesn't do cycles or patterns or anything like that. The guy that was saying 75K for Bitcoin is a macro guy. So he digs down into the fundamentals and he looks at supply and demand, and he looks at what his thesis was that everybody that wanted to get long Bitcoin was already in, and therefore there's nobody left to buy it in the big sense, and that is why it came down. And he was predicting it was going to come down to 75. A different guy who doesn't like Ether, and he was shorting it up here in this area around 4,000. He was calling for 1,500 on Ether, but I think he was probably thinking, and he's an Elliott wave theorist guy, so he was saying it's going to be a big 5-way down, and we've got, I don't know, I don't do Elliott wave, so it looks to me like we've already done 5 waves. 1, 2, 3, 4, 5, and now here's your ABC positive correction. And he's now saying we're going to get another 5-wave leg lower, which would take it down, in his thought, down to 1,500, which is way down there. And poor Tom Lee would be out of a job, I think, if that happens. So we'll wait and see. I don't have any position right now in Ether, long or short. And again, I told you about Bitcoin. We'll see where this goes. The thing that I'm interested in is that both Bitcoin and Ether are exciting trades in and of themselves, but the stocks that are related to them are even more exciting. And there are some leveraged versions of those. We're going to look at a few in just a minute, and they're doing really well today also. We've been kind of out of those for several weeks while these guys have been falling. The cryptos have been falling, but I think we might be getting pretty close to getting back into those for some real fun trades. They might even do really well if the whole rest of the market comes down, because I think a market pullback is going to be more of a macro thing. You're going to be looking at, the mags coming down and the semiconductors coming down, and basically your big blue chip tech sectors, software and cybersecurity names, they'll come down if we get a major market pullback. But you might see these niche sectors, shiny metal miners and Bitcoin related plays, and maybe some of your data center plays, your energy plays, they might do okay during that period. We're just going to take it one day at a time, right? But I'm building my lists for each of those sectors to see where they go. Now, we're long silver in the long trading room. It's been just boom, 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 boom. We had a nice silver trade in this area. We got out of it for a while, and then we're back in on the nice bull flag, and it's off to the races. Gold is okay today, but I've been saying I don't think gold is going to be that great of a trade either up or down, long or short, for a little while because the market needs to sort out um, the this macro picture with the Fed and for tariffs and everything else that there's still, we still don't even know the jobs numbers. We don't really know the inflation numbers. So gold needs that data to provide a clear path forward, and it doesn't have it. So I just think gold is going to be going sideways for a while. Silver is a different ball game because it has industrial uses and chemical uses and on and on. So I would just avoid oil and the whole energy space for now. Energy can be can be good, but the oil itself just going nowhere, and the natural gas is in the same boat. So we had a nice trade in oil. We took half of it off the table when it got way up here. Pat myself on the back for getting us out of half of it, and I thought, you know what, it still could have some legs higher. I kept on the other half. We raised our stop to protect profits, which is a good thing to do, and we got stopped out of that on yesterday's crash. And a follow through day today means that it's not going to be a buy anytime real soon. So just stay out of natural gas on the long side. You could probably still get some downside. It's not going to come all the way down to 3.8, but maybe down to 4.2 or so. We're long bonds. We just bought some yesterday. It was not the best day to get into bonds because yields were still going up, but now the yields are back up again. Well, anyway, because we were just about an hour ago, we were in back to profit in our bond trade. I think we'll be okay with that one, but we've got a tight stop on it, so we'll see where it goes. Okay, so now let me explain to you this. I have a greens list that's gotten a lot smaller with the market being, up near all-time highs and what's happening on the horizon, and we've had quite a few cracks in some good names where they're either down on earnings or whatever. I'll look at those in a little bit, but let me explain this purple list. So one of the big things that I have been working on for years now, and I'm not sure if I made a whole lot of progress, but my thesis of the market is that we always do best when we align ourselves with what the big money movers, the money managers, fund managers, hedge fund managers, institutions, big banks, their trading desks, what those guys are buying, we want also to be buying because they're the guys that move the market. We just learned that 20% of all trading volume is you and me, retail traders. That means 80% is everybody else. All the smart money, big guys with deep pockets, they are the ones that 80% of the volume is them. And if they're happy with the market's happy. If they're not, the market's not. So there are some tricks of the trade to find the footprints of these smart money managers when they're getting in and out of the market. And if you just kind of look at the heat map, that's one way of looking at what sectors are green and what sectors are red. Well, that'll tell you, at least for that day, where the smart money is going and where it's coming out. And if you see that pattern over several days, you'll know that this is the start of a big trade, right? They don't just get in all at once. They get in systematically, periodically. What's the word I'm looking for? But they get in over time, right? They're like a big ship. You can't just turn it right around. You've got to do a big U-turn. So that's one tip of the trade: watching monitoring the option flow for those really big $1 million trades and seeing patterns in those. That's another trick. And then there is just typical volume coming in and out of stocks, in and out of indexes, in and out of sectors. That's a trick of the trade. You put all of those things together, plus a few other things. I subscribe to some services that will tell me what the big whales are buying. And that's not always helpful, but most of the time it is. You start to see patterns like, here's this sector is hot over here, and one of those stocks in that sector is being bought in this huge size with call plays. And then I just read that name in one of the services I've subscribed to, that some big whale from Goldman Sachs is buying that name. When you see convergence like that, maybe you get upgrades and maybe you get raised estimates from the company. When you see a convergence of that kind of thing, you know that you're onto something. Okay. So I have a friend in my pro trading group, not going to mention his name. He didn't want me to mention his name, but he has put together an indicator that crunches a lot of that data that I just mentioned. Now, I don't know if he uses exactly what I use. I don't know if he subscribes to the same things. I don't know if he's looking at option flow. He's not going to tell me the secret sauce. But when he crunches those numbers, he gets these little bars on the bottom of the chart, kind of like a histogram. And when those bars are rising, then that particular stock is getting more and more attention from professional money, smart money. And then when it hits a certain threshold, and I don't know how it works. When it hits a certain threshold, he gets a signal, a buy signal. And he's done some back testing on those signals, and they're really good. So I'll show you the recent signals that he just sent me, and he's promised to give me a few more. And here's the caveat: I don't know if he's sending me just the ones that are successful. You know, he's putting his best foot forward. I don't know. I don't know. I've never met him. He's just a guy in my Discord group. I belong to a Discord group of traders that do it full time. Some of them work for funds. Some of them are CTAs. Some of them are independent traders like me. And we just share ideas right throughout the day. I sometimes hang out there, and usually don't because I've got my own 2 rooms I need to be in. But anyway, he's in there. We kind of connected, and I asked him what he's doing, and he showed me what he's working on. And so he's been sending me some of these signals that he's getting, and he says this is how he's been presenting them to me. You know, this one had a signal 8 days ago, 7 days ago. He's not giving me current signals, so okay, fair enough. And then he says the previous signal on this stock, hit on that date, and it went up 30%, went up 40%, went up 65%. So, if the last signal was really good, and it just signaled 7, 8 days ago, and maybe it's up 5 or 10% now, but it could still be showing some upside. All right, let me show you some of these signals. Now, interesting thing about this list. Here we are on a big Bitcoin day. Bitcoin has been really weak, but now really huge upside today. And we're seeing both Bitcoin and Ether crypto related names show up on this list. But the signals for these triggered, I think in most cases, 6 or 7 or 8 sessions ago. So it's possible, if this guy is really onto something, it's possible that big money managers were moving into these crypto plays well in advance of the move that they're now getting today, right? I don't know if that's true. I'm just kind of summarizing. Anyway, BMNR, right? This is the Tom Lee's vehicle for Ether. And I thought I had all the arrows on here. I do. I just don't have it for BMNR. All right, I apologize. I'm not sure when BMNR triggered the. I think I can figure it out, though. I'm pretty sure that it's that one right there, because I went over these one by one, and I noted that I'm trying to find out, is there a pattern for all these signals? Is it high volume? Is it range breakout? And is it a gap up? And so on. And in most of the cases, the stock on that particular day of the signal is up. And in nearly all cases, it's up higher than the previous range. And then I go down and look at the volume, and in some cases it's a big volume spike, in some cases it's not. So I'm not sure what the volume has to do with it here. But anyway, pretty sure it's that day right there. It might also be that day right there. It was a day where, it kind of took out a number of previous highs. And you can see it's up, big up today. HIMS. I've been out of HIMS. It's been a no-go zone for me. It's just had a lot of downside pressure, and then they had this bad press, and it just was a zero stock for a long time, going nowhere. And then all of a sudden, you get that big green bar, a little bit better volume than usual, but not above average volume. So I'm confused on the volume side of things, but a nice price move. And that's the day that he says his smart money indicator got the buy signal, and you can see it's been a bit choppy since then, but it is nicely up. Let's look at a few more. CLSK, big buy signal here, and it's moved into a nice looking bull flag. I think you could buy this just on the bull flag alone, because that's a very bullish pattern, and it's a brand new uptrend off the lows. You can see the LRC is moving higher. The 21 and the 50 is starting to flatten out. 21 starting to rise higher. So they're starting to get some positive price momentum moving up again. And when you have a bull flag like this with a flagpole that is almost vertical, that is very bullish. And yeah, okay, it might come all the way down here and test the lower edge of it, which 1370, that would be a painful slide. But if you can handle that, keep your size small, then this should break out to the upside and give you the kind of move that you saw here, 986 to 15. I mean, that's a $500 move per round lot, right? So buy yourself a couple hundred shares of these and maybe you get $1,000 in a couple of weeks. GLXY triggered just a few days ago, and it didn't look very good right off that trigger, but today it looks really good. And this isn't related to Bitcoin or data mining or anything. I'm not sure what GLXY does. I'm forgetting now. We haven't been in it for a long time. Notice also too that all these have in common strong momentum move up, which professional money managers are going to be interested in those kinds of things. And then a long, sharp, painful move down, and then the building of a little bit of a base down here. Now, I personally like that kind of, I don't like to trade stocks that are just falling, usually, but I do like to trade them after they have built a base. And these are building some nice bases. So, my theory of the downtrend, right? You lower highs, lower lows, and then you get a higher low and then a breakout of the most recent pivot high. And that you could also call that a cup and handle bottom, right? That's a base that I like. I like that bullish base. Sometimes too, it goes down, 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 and then we get a sideways trading range for several weeks, several months. And if you want, you can buy down here at support, or you can buy on the breakout of the range. Those are the two ways you can buy to technical analysis 101, two best ways you can buy a long time downtrending stock that then don't buy it on the way down, buy it after it builds that base and starts showing you that money's coming back in. Now he says, or my friend, that this is a Bitcoin mining thing, isn't it? Bitfarm? Some of you probably know it better than I do. Here, right there on that day, big upside, good volume coming in, breakout of the range, and then it kept going higher, pulled back in, and I think you can get it right about at the same price as that signal, so BITF. CIFR, so we're in this one already. Why? Because it's a breakout of a bullish base, right? Here is your rounded bottom, rounded cup, and it's not a real long downtrend, but it's a nice healthy uptrend with a pullback and then the bottoming base there. This is a very good setup in and of itself, but it triggered well before we got in, triggered way back here, a buy signal on the indicator that my friend has. CoreWeave. Oh, I hate CoreWeave. But look, it's having a great day. And I have to say, this is the best looking rounded bottom in the market right now. Best looking rounded bottom. Look at it on the 2-hour chart. Just perfection, right? Ultimate perfection. Here's your rounded top, which clearly sloped way down. And here's your rounded bottom starting to get higher and higher. And you want to see good volume coming in on the right side and volume drying up on the left side. Okay. So that looks pretty good. I have to say, I hate CoreWeave because I think I've had 3 stop outs on it in a row, and then I just stopped trading. I just called it a no-go zone, and I'm not even going to look at it. But hey, I'm open to trade anything that is going to skyrocket. And this one, of course, as we know, we've been in it several times back in this area. We've seen it really move very nicely. And it hasn't had a really nice move since back in that area right there. Okay, so there's CoreWeave. We are in Iran. I think it's in the options room. We're in this one on the breakout. This looks a lot like CIFR, same kind of setup, same space, right? Same sector that they're in. And this one just triggered today. So if you are looking for a new one, a fresh one, actually, I take it back. I should qualify that because my friend said that Iran is on the verge of giving a new signal today, but he won't know it until the market closes because it's on an end of day basis. but he says it's almost virtually sure, unless it just tanks from here. It's almost virtually sure to give a new buy signal. And he said something like, correct me, I mean, you won't know if he's wrong. I won't know if he's wrong either. But there was a signal that was given, the last signal that he got for new smart money investments above average or whatever. I don't know the signal. Was back in this area, back in here, and it just skyrocketed. Now, is it going to make that same kind of move? Probably not. It's not the same kind of market, and we don't have the same kind of hope for plays like this, but I do think it's probably got a 20-30% move coming up, and we were going to leverage that with some options. Mara's an old school Bitcoin miner, but I kind of like what it's doing here on a, if you look down at the hourly basis, you'll see this better. Nice little cup and handle. Got stuck at the 21 EMA, but still looking like a bull flag or bear or a handle-ish there. And it was on that up gap that it triggered EOSC. I'm forgetting, I guess this is a data center energy play. It can be a really big mover, one of the most successful stocks in the market today on a small cap basis. It's been a kind of an ugly chart, however. So it got cracked up here all the way down to lower low. That's not good. Possibly a lower high forming. But that big green stick right there, according to my friend, that's when funds started buying in earnest for the first time since the last signal, whatever that was. All right, so take that for what it's worth. And also the nice thing about this one is that the signal isn't on an end of day basis, and you're actually a little bit lower than that right now. So if you want to look at a fresh signal, that's a good one. Oklo, we are long already in the live trading room. And it's good. It's up at the highs today. Nice little bull flag forming on the 21. Here's your signal, however, a little bit lower, right, than we are in. We're at, this was triggered at around 91, 92, and we're in the leveraged version, OKLL. But if you were trading Oklo, then you'd have to pay up 16 bucks to get in now on a signal that triggered a few days ago. Bitcoin related, right? It's kind of stuck under here, the 21 and the 50 period moving average, 200 moving average, just like Bitcoin itself. But the signal was right back here, and it's higher than that now. CIRCL, haven't been in CIRCL in ages. Same problem I had with CIRCL, I had with CoreWeave, kept getting stopped out. And then it just kept going lower, and it's just, okay, forget it. The market hates it. Well, maybe that's about to change because the big boys seem to be coming back in, according to my friend's indicator, on that day right there, and it's now higher. You know, the smart money is smart for a reason. So our job is to figure out what it is they're buying, and then we just, you know, we don't have to claim originality. We just have to claim, I don't know, what do you call it? Fidelity, loyalty to the big boys. And lastly, RIOT, another one like Mara. Here was your signal. It's higher than that now and a good Bitcoin inspired move. All right. I'll do a real quick run through of the greens list. I don't want to take any more time. We'll sort these worst to best. We are in NBIS, and we're just kind of waiting for this, seeing a lot of this pattern, right? Down, 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 rounded bottom, cup and handle kind of bottom-ishy thing here. But this one might take some time. We were in SNDK. We took some profits yesterday, and it's lower today. I'm just waiting for a little bit better of a signal to come in. This is a new one. I don't really like this anymore. It was a little hammer candle a bit ago. I'm going to delete that because that looks like it's ready to break. You know, you can see it right here, right? You've got the head and, oh, is that really head and shoulder? No, not really. Anyway, it looks toppy, and I'm not interested. GH is a, you know, like United Health Service, and this one is doing really well. Here's your power gap. It came back down a couple of times to test that gap, right back up again, soft pullback into the rising 21. Perfect looking setup. Better to play this one with some options because it's a pretty slow mover. IONQ, the IONQ and RGTI, same setup, inverted bottom pattern. You'll see it on the 2-hour chart clearly. And then a breakout plus a little bit of a flag forming. Now you need 5 bars to form the flag. We only have 3 flag bars here, so a couple more days probably for these guys. But I do think that they, maybe after the Fed, give it a couple more days after that. Now, if the Fed is very hawkish and the market turns very bearish, you'll probably see these guys come right back down. But it's also possible because all these data centers, quantum computing, energy suppliers like VRT and VST, they've all been kind of knocked back, and they've had a hard time getting up off the bottom. So I suspect with the rest of the market, the blue chip tech stocks up at all-time highs. These are the guys down near multi-week lows. You're going to see them play a little differently to the rest of the market if the market gets volatile. So it could be that they become kind of a little niche space. I'm hoping that that's the case because it'd be a lot of fun to trade these over the next couple of weeks. But we'll wait. We'll wait and see. We'll just wait and see how it comes out tomorrow. This is a new one. I don't know anything about this company, but I really like this chart. ASATRO, and higher lows. This is my favorite setup. Nice soft pullback into the 21, banging on the breakout. Not there yet. CLS, boy, this one is hard to hold on to. We were in CSEX, strange ticker symbol, but it is the leverage version of CLS, and we took a profit on it. I got out a little bit too early on kind of a scary drop off the open, but in reality, it was a pretty small move for this stock. I'm not used to this stock. It moves really big. So I think the next time we play it, and we'll probably play it again because this is going to break out. Look at this. Continuation, head and shoulders. It just doesn't get any more bullish than that. And it's a great company. And I think even if the whole market caves in, this is probably going to do well. But next time we'll play CLS itself, either shares or with some options, because the CSEX was a scary hold. It went way up, right? We bought it on that little bar right there, and then it popped up, and I should have sold it that day. I didn't, and it got a little bit higher the next to this morning, and then it started coming back down, and I thought, I don't want to lose the profits, and we got out. Crowd is a cybersecurity play, right? Fresh little breakout, little bit of just like everything else that's related to software, is getting stuck right at the convergence there. AEM is probably your best play on the gold mining index. I'm not that bullish on gold. I think the miners are a better place to be, but I'm not buying them either. Silver, I really like. Silver and silver miners, you can buy SIL, SILJ, AGQ, PAAS. We have call options on that one in the options room. We have AGQ shares in the live trading room. Load up on silver, but gold, I think it's going to have, it just needs some time. I don't think it's going to crash or anything. It just needs some clarity. Shop is doing a nice little inverted head and shoulders. It looked ugly yesterday, but it's back up today. And then here's silver again. WULF, this is also very nice. This looks a lot like CLS. So just continuation, inverted head and shoulders, perfectly formed. This has a nice little right shoulder, nice and tight. Big update today. Boy, I have almost pulled the trigger on WULF last week and this week, and I just never did. And now I'm regretting it. It's still a fresh breakout, however. I just don't want to get too long heading into the Fed, that's all. BW, nice looking, very bullish chart. Right, here's your power gap, right there. Power gap, and here's your little continuation pattern. Big green stick today. That's a what is BW? We were in this one a little while ago. All right, guys, I'm gonna have to let you go because we're out. I'm kind of out of time. I do want to produce a video and get back into the room and spend a good hour, the power hour, getting us ready for tomorrow. So apologies that I won't take any chart requests, but if you leave a ticker symbol and my name in the room, I'll make sure I take a look at the chart and get that info to you. All right, God bless everybody. Have a great rest of the afternoon. Let's I see we're doing okay. Let's get back to a good, healthy profit and back on the trading floor in a little bit. Bye for now.